Suneeta Reddy, Managing Director with Apollo Hospital, joins us now. Ms. Reddy, good morning. Thank you for joining us. Now, for the quarter gone by, numbers have been decent, but wanted to first start with occupancy rates for the hotel business, which has been flat quarter on quarter. Where is this number headed, and why do you see there is scope for improvement and growth?
So Apollo Hospitals currently our occupancy is at 65%. It was 64% last year. We have targeted 70% for the current year. Our hope is that, we have both Tier 1 and Tier 2 cities, so we can build up capacity in Tier 2 with better asset utilization. Occupancies in Tier 2 should improve. They have improved over the past year. In our Tier 1, in our metro cities, they are at 70%. So we're actually at quite high asset utilization and occupancy in metro cities. And as we go forward, we've reduced the ALOS by 3%. So it's currently trending at 3.3. And with current, if we had an ALOS of 4, we technically could show an occupancy of over 70%. So because of the decrease in ALOS, we are currently at 65%. And this year we should be at 68% to 70%.
Okay, so targeting occupancy of around 60 to 70%, but what's the expectation on ARPOB and the growth in Q4? And also going forward, do you think the ARPOB would be driven by volume growth or price-led growth?
So if you let's look at both. ARPOB is over 59,000. It's about 59,330 rupees. We have seen an increase in ARPOB of around 12%. But more importantly, I think just going forward, this is because of a better case mix and price, but definitely improved case mix. With regard to volumes, inpatient volumes grew by 6%, outpatient volumes grew by 9%. So, and our ARPOB is net of doctor's fees.
Right. The digital health and pharmacy business margins are yet to, become positive. What are the growth levers here, you think, and where is it that you see the margin trajectory?
So currently with revenues of 2,027 crores, with 1,700 crores of offline, which is at 7.3% margin. So really it's the online where they're still burning cash. And going forward, we see revenue intensity coming from, selling pharmaceutical products, which is really pure pharmacy play, online and offline, where revenue and margins will significantly improve. From private label, where it's about 20%. And we're looking at teleconsults, which have grown to about 3,500 per day. And also revenue that comes from diagnostics, which is again growing, where the margin is about 15%. And all of this combined should give them a healthy margin moving into about the 9 to 10% range over the next 3 years.
Sure, Ms. Reddy. And what about the plans about the AHLL network expansion in FY25?
AHLL, if you look at the current network of diagnostic, they have about 3,000. So they have 3,000 collection points. And moving forward, they're really looking to expand. They did about 470 crores of revenue. So they're looking to really grow this by another 25%. And I believe they're fully on target. But more important is that their margin has improved by 10% to 15%. And going forward, they're looking at improvement in margin as well as growth in revenues.
Right, and how can we expect to see your net debt come down? I guess that's a very important question as well on all the investors' mind.
Currently, net debt is at 0.4. So clearly, we have, I think we're at a very safe level. We have cash balance of 1,000 crores and 700 crores of free cash flow. Going forward, we have expansion plans of where we will invest 3,000 crores for 2,000 beds. So I think we will fully be able to fund our expansion from internal accruals.
Okay, so funding the expansion through internal accruals itself, not expecting a meaningful uptick per se in debt. But what's the overall target when it comes to the GMV in the Apollo 24/7 business?
So they did a GMV of 648 crores for this quarter. This is, sorry, it's 680 crores and 2,700 crores of GMV. So it's growing at 70%. So I think it's a very healthy growth for GMV, and the conversion to revenue is at 35%.
Right. So could you update us on the capacity expansions at Pune, Hyderabad, Kolkata, as well as Bangalore?
So there's 3,000 crores for 2,000 beds. We are adding 450 beds in Gurgaon. We're adding in Hyderabad 300 beds and another 100 on the anvil. In Calcutta, we're adding 250 beds and Pune 450 beds. So this will go live in the year 2025.
Okay, thanks, Ms. Reddy. Good speaking with you today. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.